Here with his thoughts is Peter Supino, senior analyst at Wolfe Research. And Peter, do you think this increases the odds that Paramount actually wins?
It definitely increases the odds. These horses look like they're neck and neck. Paramount, with today's news, has given the Warner board more of the certainty that it's been asking for, although we're not convinced that it's offered enough to get this done.
Remind me again what your thoughts are about kind of who this makes most sense with. Is it Paramount or is it Netflix?
Well, the company that can make the most of Warner Brothers economically is Netflix. Netflix has the best mousetrap in the world for turning long-form premium video into profit dollars. However, this merger might be much more important strategically to Paramount because scale is just so important in streaming, and Paramount doesn't have it, at least to a competitive degree right now, and Warner would really vault Paramount forward.
Right, and look at the share price of Warner Brothers. It's trading up 3.5%, closer to 29. I believe Netflix offer was it 28, and Paramount was 30. Is that right?
Yeah. So Netflix offered 27.75, and it's important to remember that the Netflix offer leaves a stub equity as an additional source of value for the Warner Brothers shareholders. And so what I mean is the cable network portfolio of Warner Brothers, which will be known as Discovery Global, will continue to trade. It'll act like a dividend to the Warner Brothers shareholders. And so we think that's worth about $1 per share, per WBD share. And so the Netflix offer should be thought about as $27.75 for the studios, plus $1 for that streaming and studios, or for that Warner cable network portfolio. That adds up to just under 29. It's funny that the Paramount merger or offer looks greater at $30 cash. But if Warner goes with Paramount, they have to pay a breakup fee to Netflix of about $1 per Warner share. And so both bids right now, from a value perspective, end up near 29.
Fascinating. And there we are, 24 cents shy of that. So again, the market is kind of recognizing all of this. So if you were the chair of the board now,
market is saying there's a higher bid coming for sure.
Exactly. So who's going to raise their bids? Are both sides going to raise their bids? If you were the chairman of the board, or the board itself of Paramount, what do you do here?
Well, Paramount seems to have made 6 offers by their own statement, and now they've adjusted this offer. And so I have a hard time convincing myself that this is their last and final. Netflix has plenty of capacity to pay more. Their equity market cap of $425 some odd billion makes this a relatively easy financial bite. And so I can see why the arbitrage market is betting on a higher deal price.
And if Netflix were to just say, just kidding, we just wanted to inflict the most pain on Paramount, raise the price as much as possible, we walk away with our breakup fee and we're chuckling all the way to the bank, is that actually a good outcome for them, or would the much better outcome for Netflix be to get access to this library and these assets?
Netflix is in such an enviable position because they have a bright future on both paths. Having said that, I think they'd be better off buying these assets. The stock market has sold off Netflix stock because of the uncertainty that this deal brings into the Netflix story. Netflix has been this beautiful, pure play organic growth company, and that would come to an end with this merger. But we think Netflix would be a terrific owner of these assets if they can win them. Paramount just needs them more, and so our probability, we've been assigning a higher probability to Paramount winning for that simple reason.